All right, I think we'll get started. Good evening, everyone. Thank you so much for joining me to discuss the 2022 tax season and specifically what are the filing requirements, what tax documents that you should start gathering in preparation for next year, filing statuses, and then lastly, refundable credits. My name is Kelly Lai. I'm a staff attorney here at Brooklyn Legal Services Corporation ACE Consumer and Economic Advocacy Program. I'm here with my colleague, Keena Lee, who is also a staff attorney here at BKCA program. And here at Consumer Economic Advocacy Program, that's a mouthful, we prevent foreclosures and defend against predatory lending. We also resolve tax issues such as tax debt, innocent spouse relief, recovering unpaid refunds or stimulus checks with the IRS's low-income taxpayers. We also have two other units here at Brooklyn A. The first one, preserving affordable housing, where we represent tenants facing evictions or the landlords violating fair housing law. Last but not least, community economic development. It provides legal counsel to nonprofits and small businesses, and they also help negotiate rent or arrears. So we'll leave time at the very end for you to ask any questions you may have. This should take about 30 minutes or so. And here are the topics that we'll be going over. So again, filing requirements, tax documents, filing statuses, and refundable credits. And now I will pass this on to my colleague, Keena Lee.
Hi, everyone. My name is Keena Lee. I'm the staff attorney of Brooklyn Legal Service Corporation A. I'm going to help you with some basic instructions on income filing in 2022 year, basically who needs to file tax and tax documents. First of all, filing requirements. Next slide, please. Up to now, the deadline for 2022 tax filing year is April 18th, 2023. Please remember the date. Otherwise, you might need to apply for extension and you will be charged for late fees or penalties. Just remember to file your tax before the date April 18th, 2023. Next slide, please. Okay, who needs to file tax? For federal tax, most U.S. citizens and permanent residents who work in the United States needs to file a tax return if they make more than a certain amount for the year. If you are not sure about this question, here are 3 questions you may want to have a look at. Usually, we will check if you meet the presence tax test and also if you have a tax form outside the relevant territory, and also do you have a closer connection to U.S. or to a foreign country than to a relevant territory. Next slide, please. For yearly, the presence test is for U.S. citizens or resident alien, which means you have already a social security number. If you spend a certain amount of days in U.S. territory, you are required to file taxes. It can be consistently 183 days, while it can also be 549 days in total in 3 years, like the point 2 we list on the PowerPoint. The methods of calculation varies depending on different situations. Next slide, please. You can see there's other 3 situations. So these 2 slides contains 5 situations that you may have. If you meet one of those, any of those, you need to file your tax for 2022 year. Next slides, please. For people who do not have social security number right now, there's a more straightforward test. It's substantial presence test. You must be physically present in U.S. at least 31 days, and you need to do the math to calculate the second rule as more than 183 days on the PowerPoint. For example, if you just arrived U.S. this October, you may not have to file taxes because after the calculation, the numbers of days you spend in US will be less than 183. So you do not have to file taxes for 2022 year. But there are also benefits to file even if you do not have to. If you withhold taxes throughout the year, you can get that money back when you file your tax return. You may also be eligible for refundable tax credits that will give you a tax refund even if you don't own taxes. Next slides, please. How much we own to make it necessary to file a return? Please see the chart on PowerPoint. It basically depends on your filing status. My colleague Kelly will introduce those concepts more detailed later, but you may get what it means from its name and easily find the minimum income requirement for different status. And the fact that if you are under 65 years old will also be an important element. If you're single and under 65 years old, the minimum number for you to file taxes is $12,850. And if you're married filing jointly, it would be $25,900. For married filing separately, it's $5 for any ages. There are also numbers for head of household and qualifying surviving spouse. But this minimum income number may change every year. The number here are from the draft for the 2022 tax year rule. Just be careful about your current filing status and find your minimum income number to determine if you need to file. Next slide, please. Here are other situations. Even if you do not meet the minimum income requirement, there are circumstances that you may still need to file taxes. For example, if you own special taxes like Social Securities and individual retirement arrangement, or you receive health savings accounts, or you have net earnings from self-employment for at least $400, there would be a responsibility for you to file tax for 2022 year. Next slide, please. For filing requirements to New York State, it is pretty much the same regarding the minimum income of different filing status. The situation also varies based on the fact that if you are a resident of New York or not. If you are a resident, you are required to file tax return when you're required to file a federal tax return. Or if you have a federal adjusted gross income plus New York State additions were more than $4,000. Next slide, please. For non-residents and part-year residents, you may need to look at the rule we listed on the PowerPoint. You be careful about your income from New York and following the right rule based on your current situation. Next slide, please. Here, the website we list here is a tool to help you file taxes. And if you earn less than $73,000 for 2022 year, you can file freely by using this website. Next slide, please. Let's talk about tax documents. Here are some common forms that we will use to file taxes. There are more kind of forms on the website for other purposes, but you can choose the exact form based on your current situation, depending on if you get salaries from your companies or from the unemployment compensation, or you might be a student in college, etc. Just to make sure to use the right form to file your tax. And be careful about the real purpose of the different forms. Next slide. For New York State, there's also a lot of forms, but in general, they're divided into 4-year residence use and others. We will use IT 201 form to 4-year resident and IT 203 form for non-resident and part-year resident. Be careful, do not file wrongly. And next slide, please. Oh, here's the website we could get access to our account transcripts. In the transcripts, you will see your balance, penalties, and if your refund is issued for every year. You just need to fill in some basic information like email address and phone numbers. You could just get access to all documents in past years. I think that is what I have, and I will pass on the presentation to my colleague Kelly. Thank you.
Thanks, Kina. So now I'll be going over the different filing statuses, and this is important as it does affect your standard deduction. It determines how much taxable income you may have, so you should definitely be aware of what your filing status is. So there are 5 different filing statuses. If you do not fall under the latter 4, the default is always single. So I will only be going over the latter 4, as if you don't fall into any of those, then you should always choose the single as your filing status. So for qualifying widow, if your spouse passed away in 2022, you can still use married filing jointly for that year, but that is the last year that you can use this filing status. If your spouse passed away in 2020 or 2021 and you haven't remarried yet by December 31st of this year, you can use qualifying widow as your filing status. Of course, there are rules with the status. You have to have a child or stepchild, and the child has to have lived with you for the entire year of 2022, and you have to have paid more than half the cost of maintaining your home. Another filing status, married filing jointly. So when you are considering the status, always remember any taxes that you owe or refunds that are due to you, both you and your spouse are entitled to it. And to be filing under the status, you have to be considered married by December 31st. So what does it mean to be considered married? You are legally married and living together, or you're living together under common law marriage. So it will depend on which state you're living in. You are living apart, but not actually separated. You can still file as married filing jointly. And the last one, you're separated under an interlocutory, but not final decree of divorce. So these are situations when you can file married filing jointly. So what if you decide to file separately? If you do choose this status, just be aware there are certain credits that you can no longer qualify for. So that especially impacts low-income taxpayers. So if you're doing a married filing separate filing status, then you can't claim earned income credit, American Opportunity or Lifetime Learning Tax credits, adoption expenses, or child and dependent care tax credit. There may be situations where you decide that it makes more sense to do a married filing separately. So one example is you have large student loans. So these payments are usually based on your income, but if you do it married filing jointly status, your income will be the combination of both you and your spouse's income. So you may not be able to take advantage of the student loan deduction. Similar to medical expenses, you can deduct up to a certain point of your income, and the income, if you file separately, will only be based on yours. And the one good thing about the status is that you are separating your tax liabilities. So what we suggest is to definitely try doing both statuses and see what the results are and to see which one makes more sense for you personally. So the last one that I will go over is head of household. So for head of household, you do have to be considered unmarried, or you actually are unmarried by December 31st. You have to have paid more than half the cost of keeping your home, and you have to have a qualifying person living with you for more than half the year, except for temporary absences. The only exception is if the qualifying person is your dependent parent, he or she doesn't have to live with you. So what does it mean to be considered unmarried by December 31st? You have to meet all these following tests. You have to file a separate return, pay more than half the cost of keeping up your home for the tax year of 2022. Importantly, your spouse cannot have lived with you for the last 6 months of the tax year. We do these situations where the IRS requires some documentation. So if you happen to have residency letters or a new lease agreement that can show you live separated and apart from your spouse, make sure to include that in some of the tax documents that you will need for 2022, just in case the IRS comes back and asks for more documentation. And lastly, the home has to be the main home for your child, and you have to be able to claim this child as a dependent. So what does it mean to be a dependent, and specifically starting with qualifying child? So this child has to be related to you in some way, and it's a very broad category. So it does include son, daughter, siblings, step siblings, half siblings, certain foster children, as long as they're related to you in some way. They do have to live with you for more than 6 months. They cannot have provided more than half of their own support, and the child cannot have filed a joint return with their spouse or must have filed one to claim the refund of withheld income taxes. There are some age requirements. If you see here, child has to be younger than you and less than 19. Or if they're a full-time student, they have to be less than 24. Unless the child is permanently and totally disabled, then there is no age requirement there. And there are some tiebreaker rules that we see that the IRS has provided in situations where both parents can claim the child as a qualifying dependent. So one of the situations, if only one parent is considered the actual parent, then that parent should be able to claim the child as the qualifying child. I feel like I'm repeating the word qualifying child a lot. If parents, they do not file married filing jointly, but both can claim the child, usually the IRS will treat the parent who has lived with the child the longest, or if they lived the same amount of time, then usually it's the one with the higher adjusted gross income. But if you're unsure, definitely reach out to us and then we can provide more information there, depending on your situation. If the person who is your dependent doesn't fall under a qualifying child, they may fall under a qualifying relative. So this person, again, must be related to you, lived with you all the time under your household. There is an income cap, and you must have provided more than half the support of this person's needs for the year. So next, we'll go over refundable credits. So I'll start off with earned income credit. So earned income credit, it helps low to moderate income workers and families get a tax break. It reduces the taxes that you owe and may also increase the refunds you received. As its name suggests, you have to have earned income. So that means money earned for yourself or working for someone else, like wages, salary, self-employment. This does not include, however, like interest or dividends, unemployment income, Social Security, pensions. That does not count as earned income. If you only have these types of income, then unfortunately you won't qualify for earned income credit. You'd have to have a Social Security number. You can have children who do not have Social Security number. It's just your earned income credit will be a little bit lower. There have been changes in 2022. We're reverting back mostly to pre-COVID. We haven't heard any extension of the 2021 earned income credit refunds that were higher. So some of you may see your refunds are a little bit lower this year. And if you have no qualifying children, you have to be between 25 and 65 to claim this earned income credit. And here is a list of the caps of your income and the maximum amount that you can receive. So if you look at no qualifying children, you have to be between 25 and 65, and the limit is at $560. And here, if you have one child, your adjusted gross income, if you're not filing married filing jointly, is capped at $43,492, and the maximum you can take is $3,733. Next, I'll go over child tax credit. So similar to the earned income credit, last year you may remember a lot of individuals were getting advanced child tax credit before even filing the taxes. That has expired. We are reverting back to pre-COVID times. So the credit is now only up to $2,000, and the refundable amount is only $15,000 or $1,500 instead of the full $3,000. The child has to have the child has to be under the age of 17, and you have to have some earned income credit or some earned income of at least 200, unless you have 3 or more children. And you don't have to have a social security number to claim this, but you do have to file an I-10 by the due date of the tax return, including the extension as well, which will probably be around October. And there's also the education credit. So these two types of credit, the American Opportunity Credit or Lifetime Learning Credit, help taxpayers who are paying higher education costs for themselves or a spouse or a dependent. To get this, the taxpayer or student usually receives a 1098-T from the school. So if you haven't received it by next year, make sure to contact the school if you do want to utilize this credit. And I think that concludes the end of our presentation. We'll open up the floor for questions. Okay, so I think one of the questions we have is, when can I start filing my 2022 tax return? Kina, you want to take this?
Yeah, for the start date to file 2022 tax return is January 24th. You can start file from this date. Is there any other questions?
Let's see. For the advanced child tax credit, does that count as income, and will it affect my benefits?
For the answer of this question, the answer would be no. It does not count as income, nor does it affect your benefits. It should not be continued as a source of income when determining your liability to file tax. That's it.
Yes. Had another question asking for a point of contact. So I have listed it here on the slide. If you do want to discuss your case more specifically, if you don't want to answer in this public forum, you can definitely call us at 718-487-2300, or you can send us an email at info@bka.org. And you can always look up our website. We should have all the information there, www.bka.org. And I'm just going to post some useful links for next year. So you might want to go to Volunteer Income Tax Assistance site. You can click on the link here. I also posted onto end of slideshow. And Kina already mentioned this. You can check some of your past account transcripts. Some of the tax return filing websites do ask for your prior year adjusted gross income. So you may want to, if you happen to not have that tax return, you may want to check it online. Okay. Do you provide assistance for small business tax return? We unfortunately do not. We work mainly in individual tax returns, and you may want to ask for volunteer income tax assistance. They may have resources there, but we unfortunately do not prepare small business tax returns. Okay. Oh, another question. If I'm retired, do I need to file?
Right. If you are retired, you should always check your tax documents to see if there's any tax are withheld. You may be entitled to a refund, so check your transcripts. They can change anytime. There's a question, if I lost my refund check, how do I get a new one?
Yeah, I mean, one of the ways is you can definitely call the IRS directly to see if they can send you a packet. If it's directly deposited, there shouldn't be an issue. This usually comes up if it was paper filed and you didn't request a direct deposit. You can contact the IRS to ask them to send a packet if the check was lost in the mail. If you cannot get through the IRS phone lines, which happens quite often these days, you can also file a refund trace and fax that in or mail it into the IRS to ask them to trace for that exact check. It could take some time, but we're hopeful with the IRS centers opening up. They are a little bit faster. Hopefully this year would be a little bit more smoothly so that there aren't as many delays, but we won't know until really we start the tax season. And I think the last one question is, why is my refund different than the amount on the tax return that I filed? And I think I can answer this one. So yeah, sometimes if you have a debt, not just with the federal government, sometimes it may be with the New York State, and I'm only listing New York State as we mostly prepare New York State tax returns. Sometimes you may owe the Department of Labor, so some of the refunds may have been used to pay those tax debts, or it could be a prior year where you had balances due. So yeah, again, definitely check your individual account online, and not just with the IRS, but New York State, because sometimes you may not be aware there may be tax debts that are owed. Okay, another question. For change of address, do you suggest doing it when filing or prior to filing tax return? Yeah, so if you are expecting mail from the IRS before the tax return deadlines, then I would suggest doing it online. You can go to your individual account to change your address, or you can also call them directly and say you want to update your address. But if you aren't really expecting any mail from the IRS, then you can just do it when you're filing your tax return. The IRS automatically updates your address according to what's listed on your tax return. So the only times I see it is they're expecting correspondence with the IRS, examiner or audits. That's when you have to make sure you have the correct address. Otherwise, it's safe to just file your tax return with the updated address. Great. Let's see. I don't see any other questions. Okay, let me just make sure that I didn't miss anything. Yeah, again, if you do want to discuss your case further, just contact us here, and we can always set up a time to do an intake if you have any further questions. But thank you so much for joining us tonight, and hope you have the good rest of your evening.
Thank you so much.
Thank you. Bye.
Bye.